Yo guys, CFTC, welcome back to another video. So pretty much today we're gonna be adding a little bit more fuel to the fire, right? So today we're pretty much gonna be focused on the Q4 distribution cycle, or how to pretty much execute all your trades within Q4 if you pretty much missed the Q3's distribution or it did not present itself any move, right? Or Q4 becomes the forms of distribution within the price range, right? Hence, in simple terms, right, I pretty much only trade within Q3 heading into Q4. But if I'm trading futures, right, ideally I'm trading from pretty much 9:35 a.m. all the way to 12 o'clock, right? But ideally I want my entries to be within Q3, right? But let's say price does not give us the chance, right? In simple words, we would get our accumulation within Q1, right? Then price manipulates within Q2, right? And then Q3 distributes, right? For us to trust this whole entire pattern or structure or algorithmic footprint or delivery or whatever you want to call it, right? We'd want to see pretty much sweep the London low for New York, right? This is the New York model, right? It's pretty much universal. It applies the same even for London. So in this case, if you're trading London, that would be the Asia low. But in this case, it's the London low, right? Price accumulates, manipulates lower, within Q3 distributes high. And what does it do? It sweeps a drawn liquidity, which would be the London high, right? So what do we look for? London high, right? Initially, what I personally look for, right, as soon as price taps and sweeps the London high, right, and we have no forms of draws on liquidity external from that, which would be in simple terms the previous day low, right? Specifically the previous day low, right? If we're coming from internal to external liquidity, right, I would generally anticipate a price reversal, right? A price reversal going lower. And usually, right, I want to see this within Q4, the last quarter range, right? So hopefully just me specifying it like this makes sense, right? But right now I'm gonna try going into the live charts and then we're gonna take it from then, right? Okay, right now we're on gold futures, right, on the 4-hour time frame, right? What do we have here? We have a breaker. We have a, let me just leave it like that. We have a pretty much a simple breaker that price taps to, and we're anticipating lower prices. And how do we know that? We go into a lower time frame or a trading time frame. Price during London accumulates, right? What does price do? Sweeps the London high. But before it did that, right, drag this to the, yeah, before price did that, right, price accumulated around like 6 a.m., right? 6 a.m. to 7:30 pretty much price accumulates, and then we get our session open just right there. Not our 9:30 open, our session or quarter open. Let's call it a quarter open. Key open, right? And this is New York, so we'll say New York Q3, and because New York is pretty much Q3 of the day, right? Our New York Q3 open, right? And then price manipulates lower, right? Sweeping the accumulation low and the London low. How do we know that this is the London low? We want to go into our indicator, right? And then we're going to scroll down to our session, right? Then just for annotation's sake, we can enable this. Then it should load into the, it should load in, right? Price, London quarter, from midnight to 6 a.m., right? Price manipulates lower, right? And then within Q4 of Q2, right? And how do I know that? If I divide this range into quarters like this, you'll notice that price within Q3 heading into Q4, it manipulates higher, right? And if you want to be very accurate within that, you'll notice that price manipulated higher within Q3, right? Initially, this was NFP, right? Non-farm payroll Friday, right? It's usually, I'm not always looking for this during news events. I just look for it when it presents itself. And it's usually either micro setup or not, pretty much. It's pretty much universal to whatever quarterly cycle you're trading, right? Not the micro ones. The micros are the 90-minute cycles, right? I have made videos on that if you want to check it out. Okay. But let's say, for in case you pretty much missed this whole distribution higher, right? And then price reaches the previous session high, which is the London high, right? Heading into Q4, right? We want to see pretty much displacement, right? This is pretty much how we identify the Q4 reversal, right? In simple terms, how do you know that Q4 is going to be a reversal? Or how do you anticipate Q4 being a reversal? Is when Q3, right? Q3 reaches our overlying target or narrative, which is the London high. Whenever you're trading within the New York session or the New York quarter, once price reaches the London high or sweeps the London high within Q3, you are pretty much going to be expecting or anticipating a Q4 price reversal. And usually that is confirmed by us getting a shift in market structure within Q3 heading into Q4, right? So currently, the most obvious zone for our shift for me, right, would be pretty much this low right here. Identifying this as a breaker block, right? It's currently an order block. If price respects it, this would become a proportion block. Then we pretty much use this as a potential breaker if price violates it, right? So I'm saying, let me just rephrase that. Currently, this is an order block, right? Let's refine that. Just zoom in. This is an order block, and this is currently just a candle. But if price closes after tapping this one, this would become a proportion block, which should be supporting higher prices. What do I mean by that? If price, the next candlestick closes above this becomes a proportion block, and then we can anticipate it supporting higher prices. But if it fails to do so, it becomes a breaker. So we'd initially shift this to this, right? Okay, now let's see. Price draws higher, draws lower. Then price closes below it. What does this become? Our breaker. So now our breaker is valid. This would be the first area. Okay, let's just do it like this. By the way, this is bar replay, right? So you do not really, you initially place your stop just above the price when price closes below the breaker. Just right below the breaker. Then your drawn liquidity, your first drawn liquidity would be the Q3 distribution high, low, right? And also the London high would be valid as a drawn liquidity, right? Okay. Then your best case scenario would be your Q2 manipulation low, sell side, because that too is true sell stops, right? Okay. Let's say you pretty much got this entry. How I would usually approach it, I would go half risk on my initial risk and then scale back in when I get a fair value gap entry, right? I repeat, this is bar replay for educational purposes. It's not a live trade. Yeah. Okay, now let's see. Price draws lower and leaves a fair value gap right there. So we're going to see price reach back into it and then distribute lower, right? Okay, now let's see. And then now price forms another one. Okay, in this case, right, where we have two fair value gaps like this, we initially do not really know which one price is going to be willing to head to or respect, right? So how I usually do it when I'm on the 5-minute time frame, I scale down to a lower time frame. My favorite one is the 1 minute, and traditionally or optionally the 30 seconds. But in this case, the 1 minute applies, right? So if you can pay attention, this is our first fair value gap. I do not know which one the price is going to respect, right? But yeah, so what I'm usually, okay, not usually, always looking for is price to drop back into it, then break lower, providing us with a mitigation lower. Okay, let me just show you what I mean by that. Price draws lower, draws lower, draws lower. Okay, now price taps this fair value gap, right? So this right here would be our order block, right? Would mark this zone out as an order block, right? Then if price draws low and closes below it, that would be our initial entry with a stop just above the fair value gap, right? Okay, let's see. Price draws above, then sweeps this low. So this would be our new breaker. So when the next candlestick opens, would initially go short. Okay. We initially pretty much, as soon as it opens, so you'd be pretty much executed just right there. But in this case, for learning purposes, we just place it right there. Then we go back into our 5-minute time frame, and then we want to place our stop just above the fair value gap, right? If you want to see that clearly, if I can hide this, this is how it would look, right? This is pretty much how I initially refine my trades. This is what I'm always looking for, and this is how I trust that price is going to respect this fair value gap over that one, making this one a breakaway gap, right? Meaning the price is simply not going to drop back to it. It's going to leave the whole fair value gap open, right? And then we'd set our target as our quarter low or our London high, right? But like right now, let's just see. Price draws and then reaches your target, right? So that is pretty much how I approach the Q4 distribution or reversal, right? Simple terms, I'm treating Q4 as a distribution lower after Q3 distributes higher, right? This is how I anticipate the reversal lower, right? The rules are very easy, specific, and straight to the point. Price needs to sweep the previous session high within Q3 for Q4 to be a reversal. Because if it fails to do that, more often than not, price is going to be a continuation higher, right? Okay, I'm going to give you an example right now based on today's price. Let me go to NASDAQ. Let's just go to NASDAQ, then we can break it down right there. And I'll be pretty much going into more details about today's price range, right? Okay. With this, notice that London accumulated lower, right? And then open of New York price accumulated lower too, right? And then Q2 sweeps the accumulation low. So it's basically a classic model. And then it distributes higher. We get our breaker right there. And then price draws higher, draws back into the breaker range, right? And then distributes higher, right? Plain simple, straight to the point, right? But notice price sweeps the London high within Q4, because Q3 failed to reach that high, right? So in simple terms, what I'm referring to is when price pretty much sweeps the London high within Q3, anticipate Q4 being a reversal. That's how you pretty much identify if Q4 is going to be a continuation or reversal. It's all dependent on if it's going to draw or sweep the previous session, quarter session, high or low, right? Okay, hopefully you pretty much found this video insightful, helpful. If you need any assistance, any help, then just be sure to hit me up. Guys, I'm really trying to make this as simple as possible because it's not that difficult, you know. People are just complicating these things. Or maybe they do not know how to trade like this. I don't know. I do not know, but yeah, everybody's got their own models and whatnot. But yeah, hopefully you found this video insightful, helpful. And yeah, be sure to hit the subscribe button and have a good day.